Everybody, welcome back to another episode of the Get Wealth Podcast. I'm your host, Brendan Wiersma. Today I have here Michale Delprete, a seasoned real estate investor in Arizona. So I'm pretty excited to talk to you because real estate is something that I've grown to become interested in, if you could say it that way, over the last few months doing this podcast. It seems like the real thing that people are making money in. So I'm excited to pick your brain, and thanks for coming on the show.
Hey, thanks for having me, man. Really appreciate you reaching out yesterday on Instagram and making it happen so quick. So,
of course. So you were talking earlier. You said you've been in real estate for 12 years. How does that start for you? Were you always wanting to be a real estate investor? Did you work a different job, or how did you get here?
Yeah, man. Well, long story, because I'm a little older than you, but the brief way was, let's just say about 2008, 9, right? Actually 2006, before everything crashed. I had a buddy that was fixing and flipping. He was a young guy, and he was just boom making 50 grand a flip, 100 grand a flip. It was just, I don't know if you know much about the last boom, but it was like they're giving away money, so things were just appreciating. So anyone and their mother was in the business. So he was just doing well. And I always thought that was pretty cool, right? I thought, I helped him out on some projects, working and stuff like that. And then at that time, HGTV, fix and flip shows, all that stuff were coming out, and it was pretty hyped up. So of course, you always were attracted to the big chunks of cash. So, but at that time, my son was being born. He was like, whatever. Yeah. When the shows were coming out, I was working with my buddy. So I found out I was gonna have a kid. So I went down that road of, hey, I need to be responsible and get a job. So I worked at Verizon Wireless in Chandler, 2 to 11, right? So that was what I was doing. So then what got me into it was I was at the water cooler talk, all that. Everyone's talking before like a training. And then this guy was like, hey, you ever heard of hotpads.com? Back then it was like, I think Zillow bought it. It's like a Zillow site. He's like, yo, houses are condos I'm seeing for 10 grand, 15 grand. And I'm sitting there I'm just thinking, I'm just like, well, just a couple of years ago, my buddy was flipping at 3, 4, 500,000. I was like, I was just curious. I was like, what's going on that it's such a tragic or big difference? So I saw that what's going on in the market, everything was super cheap, everything was on sale kind of thing. So that's what sparked me to get curious. So I was like, how do I get in on this? Right. So start asking questions. I started Googling, Googling, surfing the internet, and I found sites like Bigger Pockets. There's like these other real estate forums out there. There was not as much information as there is today to get real estate knowledge, right, for free. There was one guy on there, Tyrone Taylor. He's still around. He had 100 YouTube videos on how to wholesale real estate. Right. So before I found him, I was like, I'm not a fix and flipper. I got a job, I work, I have a kid. I don't have money. I don't have credit. A landlord, you rent out the property for $1,000, you end up with like 200. Like, how do you even get rich? Doing that? I didn't understand. And then an agent, I was like, then I got to go start my own business and sell all that stuff. So then what led me to finding wholesaling on these forums, and said, no money, no credit. I was like 30 or 5 grand in 30 days. And I was like, that's more up my alley. Right. But then you get into, is that real? You kind of go down that road. So, but then that led me to Tyrone. So I said that a little early, but so I just watched his videos and I applied what I watched. And then long story short, 45 days, I had my first $5,000 check.
Wow.
So this took action, just like how you called me. I was like, let's do the podcast.
So you started out wholesaling then. So that was back in around 2008 when everything went down?
No, it really started kicking like end of 2009 was like when I started getting curious and getting out there. Yes, and I started wholesaling.
Yeah, I mean, I think to the average person that just has a job or doesn't really think about real estate investing, wholesaling is a foreign topic. I mean, when I heard about wholesaling, it's almost like you were saying, is that real? What are you doing? Isn't that what a realtor does? Like, there's all these questions that make it seem like, maybe it's not legit or it's shady or who knows, but wholesaling is kind of one of those ways that you can get into real estate investing without having any money, and you're providing some value just in a different way. You're not quite providing the capital in the sense.
Correct.
So is that what you did to get your first few deals, was wholesaling?
Yeah. So check this out. So yeah, wholesaling. So remember, let's just clear this up. As a wholesaler, you're technically not an investor, right? You're creating a transaction, right? So basically, you're buying and selling paper. You're creating value, tons of value. You're working hard to find that discounted property. You negotiate with the owner, you create a valuable deal, you get it under contract, then you assign your interest in that contract to the end buyer for a profit in the middle, right? So there's money, it takes money to get the deal. It just doesn't have to be your money. Simple as that. Yes, it might cost money, gas money, to go do some driving for dollars, or maybe do some marketing of some sort. There's ways to do it with low costs. I say the more money you have, the faster it can happen. The less money you have, the more sweat equity you got to put into it. But so what happened was I got that deal, and then I got that through a bandit sign, right? Those mini billboards on the street corner.
Wow.
And then, I've ultimately sold it. It was a condo inside this huge complex in the Maryville section of Phoenix. And basically I sent letters to every owner in that complex. There's like 200 units, right? So I sent a letter like, hey, I'm in unit 10. I want to sell my house. Call me. That's all I did. And then boom, I got flooded with calls, and I actually sold it to one of the presidents of the HOA, bought it, right? So then I'm driving for dollars in my neighborhood in Central Phoenix, and I found the ugliest house in a nice neighborhood. And back then, without all the technology, you go to Maricopa, you write down the address, maricopa.gov, you go to your county website, look out the tax mailing address, send a handwritten letter to that address, lady calls, I get it under contract. So where I'm going with this is, I was on my break. I always check my phone on my breaks for my real estate line, and some guy called and was like, "Hey, I saw this property. This is so and so. I'm interested in one. I'd like to know more." And I was posted it on Craigslist at the time. I was like, "Yo, this guy sounds familiar. I think I know him." So I called. And I did know him. I went to high school with him. And he's like, "Yo, what are you doing with this property?" I'm like, "I'm trying to wholesale." I just figured this thing out a couple of weeks ago or whatever, months ago. And then he's like, "Yo, I've been wholesaling for 5 years. Come down to my office and let's just catch up, and we'll see what we can make happen." And before the call ended, he goes, "Mike, bring all the leads, all the homeowners that ever told you no, bring those as well." I was like, "They said no. What do you want that for?" Right? So whatever, we set the appointment. I go to his office and catch up. And then, so basically, do you do real estate full time, or do you have a job right now, or do you have a business?
I'm a pilot, so I'm a flight instructor at the school I go to, and that's like my full-time job. I just am trying to do real estate. I haven't done my first deal yet.
Okay, cool. So check this out. So let's just say, here's what happened with our meeting is, if I was to show up to your flight instruction school tomorrow, and they were like, "Train Mike to do what you do," you can see the invisible, my invisible. You could be like, "Mike's gonna mess up here. He needs to understand this, this, and this before the next 2 weeks. This is what he's gonna go through." You could just tell me right now, right?
Yeah.
That's what he saw in me. And that's what older investors see in the new investors, right? So he goes, "Let me work those 20 leads." So long story short, in 3 to 4 months, he turned those into 4 deals. So within maybe first 4 or 5 months of the business, I already had like 15, 20 grand in my bank account.
Whoa.
Right. So that leads into us just becoming partners. So joint ventures. So that's what you want to understand as a real estate investors, joint ventures. So I can make my phone ring. Before Verizon, I was a concert promoter in Phoenix. I used to bring all the hip hop concerts to town. So I knew how to sell tickets and generate a buzz. So I could make my phone ring at that time. And then, but he wasn't able to make his phone ring, but he had 5 years of valuable knowledge of real estate up here. So my marketing, his conversion into a partnership turned into 30 wholesale deals my first year in the business.
Whoa, that's super cool.
So yeah, whatever you guys want to learn from that, hopefully it helps.
No, there's some really good stuff there. I mean, that's probably to someone who's never heard of or like thinks of real estate investing and that phrase, it's like, oh, it takes money to make money, or a penny saved is a penny earned, all these little things that people hear that kind of just block out what the reality is of people like you that go out and just find opportunities, or actually go out and do work, and that leads to meeting someone, and then that person helps you out, and you can just build up. So I mean, yeah, that's incredible. How has that changed from when you started wholesaling to now? Because it's a different game now, in a sense, because if from what I've heard, I don't know, I wasn't doing it back then, but in 2008 there was a lot of deals, but not a lot of money. Have you had to adjust, or where are you at now?
So here's the transition, right? So I started at the bottom, and going with the assumption we're at the top, right, at some level. So so I've seen the whole progression of the up cycle, which is pretty cool. So back then, like you said, there's tons of deals, but not tons of a lot of houses, less buyers. Now there's tons of buyers, less houses.
Mm-hmm.
Right now, the difference, though, what you need to understand is we're talking more or less of the retail buyers. Like, so there's a lot of houses, but there wasn't a lot of retail buyers and a lot of loans. But that's what you need to learn as a wholesaler. Anyone, the markets are always changing, and you have to be able to shift your strategy. Right? There's a bunch of strategies you hear: subject to, seller carryback, lease option, wholesaling, fix and flipping, landlording. There's all these different ways to look at deals and acquire them. You just need to be able to stay in the business a long time to be able to adapt to each deal is different. Every homeowner, every deal is different. So you have to understand all the tools, have all the different tools. So what I'm getting back at is what I learned looking back is there was a different type of buyer. So we were wholesaling deals to people in China, Australia, Canada. So other people in other countries, and Californians, like the people with money, knew America was on sale. So those were buyers. So you just had to switch. Like, obviously being a fix and flipper was tough at that time, right? Because your only focus is cheap house, fix it up, sell to retail. Well, there's no retail buyers. You got to shift. That's why there were some agents out here that I saw at that time. They were flying to Canada. They were doing seminars. They went to the buyer, the right type of buyer. So thinking now, if you're watching this in the future, 2022, 23, 24, whatever it is, you just got to shift who you're selling the deal to.
That's interesting. Okay. So right now, your focus is more on finding the deal rather than finding the buyer, right?
Yeah. Well, in a wholesale business idea, right? Your buyers go through cycles. Every buyer's different. So one buyer might buy one a year, and he works 40 hours a week, and he does it on the weekends. One guy or girl might buy 10 houses a month, right? Now there's hedge funds and big corporations. So like you're always building that because people have different strategies. So you can't just rely on one or two buyers, right? Although you can do well with them. You can't, if you're in a transaction business, you're doing a lot of deals, you always got to build your buyers and sellers. If you're going direct to homeowner, how many houses do they normally own? One, right? So you're always doing both marketings on both ends.
Mm-hmm. Got it. As far as marketing, there's so many resources now compared to, like you said, you just found a house and wrote one letter to the homeowner and sent it and got a call back. Now it seems like direct mail is, people are doing 20,000 letters at a time, and they're spending so much money to get a certain amount back. So there's a lot more resources, but it's also a lot more competitive. How have you been focusing your marketing and lead generation?
Right now, what I currently do is obviously we pull all our lists, we look for lists that have pain points, right? You see here, divorce, back taxes, probate, pre-foreclosure. So you have all those types of lists that you can pull.
Mhm.
And in addition to that, right, we have virtual driving for dollars, where so I'm part owner in a call center in Hermosillo, Mexico. So I have my virtual team is in Mexico. So I actually have agents on Google Maps driving up and down every street of Phoenix and Cleveland, Ohio, looking for the ugly houses. So like that's another way we generate, in addition to pulling those lists, because a lot of those lists, everyone's calling as well, most likely, right? So I'm calling, so we're pulling all that data, skip tracing it, right? I'm just familiar with that, right? So so we pull the information. Now we got their phone numbers, potential email addresses, and potential mailing addresses, right? And then we run that through cold calling, texting, and I do very little direct mail. So my main two are calling and texting.
Yeah. Yeah, that seems like, from my experience, the most contact that I've been able to get is from cold calling. I use batch driven. That's what I've been switching to the last couple months. So someone starting out today, how would you coach them to get their first deal, like step by step? I mean, you probably get that question all the time, but I'm always curious what people say.
So one, well, I always go into, and you always hear me say, is what's your investor identity? So it depends, what are they looking to do first, right? So I got to figure out what strategy, what lane are they in? Because a lot of new people, they want to be like, all right, I think I need to wholesale so I can make some money, and then I'll have enough money to buy my first flip, and then I'll make even bigger money. And then after that, I could buy my first rental, right? Like it works, right? But I mean, do you have to do it that way? That I don't know your life and your time and your learning process. That might be 5 years for somebody, and then they lose their ass on something, they're out the business. So if you want to be a landlord, sometimes I'll say, hey, be a landlord. Let's talk about how you can become a landlord today. So, but we've been talking about wholesaling. I still think the highest income generating activity of your real estate business is analyzing, writing offers. So I would say marketing and sales is number one. Mm-hmm. So you got to find, no matter what strategy you're in, you're going to need to find deals. So one, you're always educating. That's not even like, hey, what do I do first? Like you're always educating yourself every day. It's like you got to know how to comp, right? You got to know, and you got to understand some of these different marketing channels, right? So you got to know how to, when you know your strategy, you got to know how you're going to write your offer and analyze it. So coaching, mentoring, whatever it is online, understand how to analyze the deal, what kind of deal you're looking for, understand the basics. While you're doing that, you're marketing and you're contacting homeowners. I don't care if you're door knocking, I don't care if you're sending letters, bird dogs, networking, whatever it is, you're telling people that you're looking for a deal and you're looking to buy it cash and you want to write as many offers as you can. That's all. That's when anyone approaches me from like Ezria, they're like, hey, Mike, help me out, whatever. I just say, pull list, skip it, call it, and just don't stop.
Yeah.
And
that's good.
I mean, you just got to write offers. If it's agents, right? And I know MLS is hot right now. It's probably pretty. I can't say you can't get a deal. It'll just be a lot harder. Write offers on MLS. Write offers on wholesalers. Wholesalers are sending out deals. They probably, they can become motivated sellers too. Their contract might be expiring. They're probably trying to get a home run on that deal with 20, 30 grand spread in there. No one's buying it. For all that I know, you got that offer on the table ready to close and bring the earnest deposit. They might call you back. It's happened to me over the years. So write offers.
Yeah. I think you brought up a great point of that everyone has their own real estate identity. I mean, I've never heard it put that way, but it makes sense because, not everyone's going to have the same lifestyle or motivation. Maybe some people want to actively be doing fix and flips and that's their main thing. Like they see it on TV, but other people are just really focused on buy and hold. And so there's no one way of doing it. So that's a good way of
it makes it easier. Yeah. Like, you know what you want. So it's like when you have a target and you know what it looks like, and now you could tell everybody about it, right? Mm-hmm. Hey, I'm buying in this neighborhood, in this zip code. I'm looking for 3-2 single family, right? I can't do add-ons, and I just want medium type repair, right? You know what I'm saying? Like,
Yeah.
when you put it out there, now people will bring it to you.
Right.
Or when you're analyzing, or someone brings you the deal, now you could say yes or no. No, this is out of my focus. I don't need to look at this right now. This is where I'm at.
Mm-hmm. One of the things I find so fascinating is the creative finance topic, because there's this idea of buying homes that you got to go get a mortgage and you got to have your credit and your debt to income and make sure everything's good. And then you buy a house and you pay it off over 30 years or whatever. But then there's this idea of creative finance. And you mentioned having different things in your toolbox to be able to,
Yep.
close a deal. That, to me, that seems like one of the coolest things is being able to structure a deal creatively. And I don't think a lot of people have ever heard of that. Have you had experience with creative finance, and how have you been able to use it?
Yeah, of course. So creative financing. So it's ways that you can enter a deal. So as an investor, and we're looking at situations and we're analyzing deals, there's usually some problems. If someone's willing to get creative or sell their house at a lower price of some sort, we got to have solutions. So it's kind of like, all right, so if you called the plumber and your toilet was clogged, and you called the plumber over the phone and was like, hey, my toilet's clogged, how much is it going to be able to fix? They're going to go, well, I don't even know what's wrong with your toilet bowl. I got to see it. I got to come out and I got to diagnose this problem. And they come and they ask questions, they look at the scenario, and they figure out how to fix it once they diagnose it. So they're going to go, all right, here's what we need to do, and here's how much it will cost. But what if that plumber just showed up with a plunger, and that, it wasn't that it was clogged? Maybe it's as a cracked tank or something, right? Like, he's not going to be, that's cash. That's how I look at cash. Okay, cool. If I just show up to every deal with cash, that's like going up to the job with a plumber going with a plunger. So you got to bring in the toolbox, right? So that's where you bring in subject to, seller carryback, lease options, and getting creative land contracts, like all these different ways. So I don't get fixated on, I'm this type of investor. I'm just like, hey, I know them all. And I go like a plumber or a doctor, and I diagnose every homeowner based on their situation. Got it?
Yeah.
So that's why I have the tools. So to give you an example, we did a deal here recently, Coolidge, Arizona.
Mm-hmm.
All right. So that's south of Phoenix, about an hour away, small town. So basically 2006 built house. Lady, when COVID hit, something happened with her job. She just took off, moved back to Phoenix with her family, and just left the house vacant. So it's been vacant for a year, right?
Mm-hmm.
And so basically, we were calling. So here's what I did. Someone new said, how do I start wholesaling? I said, pull a list, skip trace it, and call it. So that's all he was doing. And then he got this lead, and he's actually in California. So since it was here, and I was help coaching him and helping him out, he brought me in on it, and I helped. So he didn't see that, right? I saw the invisible. He was like, hey, I'm trying to make a cash offer, but the house was worth $250, and she owed 170, like 171, but was like 30 grand behind in arrears. Like, so she needed about 200,000 total, so you can't, and the property needed a little bit of work. So was it a fix and flip deal? Right? After 250 minus commissions and repairs. And then, the wholesaler wants to make a few bucks. The homeowner wanted to make a few bucks. So now you're at like 210,000, 215,000. Then you get what I'm saying, how the numbers work. It's not a flip. So you got to be creative. So you got to say, okay, cool. So what we did was subject to existing mortgage. Came in, right, got on the phone. So something you can do also is you can become like a power of attorney, a specific power of attorney for that specific scenario, or the homeowner can call the bank and say, hey, Mike can talk on my behalf for the next 30 days. And I can call the bank, ask all the questions about the loan, this and that. So subject to, the loan stays in the homeowner's name.
Right.
But the property, when I buy it, will go into title, will go into my name. Right. And you need to educate them, and they need to understand that. But just to keep it simple, So basically we brought the 30 grand. It was like 27 and change, right? We had closing costs. We gave her 2,500 bucks, gave the wholesaler 5 grand, right? So now maybe into it going up to 40, right? And then, but her payments were 1,400 bucks. So now I brought in the 30 up to 40 grand, cleared everyone out. Homeowners gone, wholesalers out, bank's happy, they're current. And now I have $171,000 mortgage at 1,400 bucks a month. But before, when I was analyzing, I had to make sure I could rent it, right? So I could rent it for 1,750. Got it. So is it beat my exact criteria? So it's a little thin, more than I would like it to be. However, after talking to my loan officer and looking at the deal, I'm going to be able to refi that loan in a couple months. So I might make a little cash flow right now and have my 40 grand sitting there. But in the next few months, I'm going to be able to drop that down to it was like 4.7, right? Technically my payments would be around 950 plus taxes and insurance. So I might be at 1,100. So now I'm going to be at 1,750 with $1,100 mortgage.
Oh, wow. So you're making like 600 bucks cash flow on that.
Potentially, right? There's maintenance. There's like always little things, right? Property manager. So.
Oh yeah. So after that, it might be closer. Yeah.
Yeah. And I know I'm just all over the place on this, but so I'm saying when you're analyzing deals, you got to understand how work out your gross rents minus all your expenses. You got to do all that math first, right? So I just do a bunch of everybody right now, but at the end of the day, right? The plunger didn't work. The cash didn't work on that deal, right? So now I have a 2006 built house out there. It's cleaned up. I didn't need a major renovation or anything. So my exit on that is my attempt before renting it to a normal renter is just because it's a hot market. So I put out as rent to own. So that was my exit on this. So I put it out at 280,000, 50 grand down, and 1,750 a month. So when you do rent to own, it's 2 separate agreements. You could do a rental. I'll do a 2-year rental agreement. And then that 50 grand is an option fee to give them the right to buy this house within 2 years. So the 50,000, in essence, in my perfect world, I'll recoup all my money and maybe make a little bit of cash, right? And now I got all my money invested. Now now I pass on all the repairs, no property management, all that over to the new buyer because this is going to be their house. So now I can really make that 600 that we talked about if they're not a standard, tenant. So I have a couple bites. We have a couple of showings next week. So that's a live deal, that we're working on. So So if it doesn't work, I'll just keep it as a rental.
Yeah, that's awesome, man. I mean, that's some serious real estate ninja stuff right there. You're doing a lot of things subject to, and you're structuring it in a way that makes sense. But ultimately what you're doing is you're finding the problem and then you found the solution for it. And it's not like you're taking advantage of everybody. You're helping somebody. You're the hero in that situation, right? Someone's behind 30 payments or whatever it was, and you came in and you put money in their pocket and literally solve their problem. So, I mean, to me, that's just the coolest thing right there is that you're able to do that.
Like, think about it. So her situation was, right? She knew she was in it. We agreed. She gave me 5 years to refi out, right? So she knows she's not going to be, she didn't want the foreclosure on her record. She knows she's going to be turning things around and having better things in the future. So this way it keeps her out of that situation, right? And getting foreclosure on her record. And she got a few bucks in her pocket. Doesn't hurt. Like some people think it's like you're doing something crazy, but I can show you the text. It's all like happy emojis and thumbs up, like smiling faces. So now that's one end of one problem we solved. Now think about the other end on the rent to own. The person that's looking at it, the most serious one, for example, if it were to go through, down in those areas, there's Lucid Motors, there's like all those tech factories that are built, right? And they're hiring, people are coming from other states. This guy's from out of state, and he's been renting and going around because he works at he's an executive at those corporations, and he doesn't have a bank loan right now. Yeah. So he's able to lock in his job, get this property locked up in his name for 2 years, take care of his credit, get his job history, pay his taxes, and become a qualified buyer within the next 2 years. So now we solved his problem too. He still got to buy a new house without a bank loan.
That's awesome. I love it. And that's what it's all about. Everyone's winning in that deal.
Yeah.
One of the things I'm more interested in is doing deals out of state, because if you can do that, I mean, you're just opening up a lot more opportunity to be able to grow your portfolio. You mentioned you've done some work out of state. Do you have buy and hold rentals out there? Are you doing fix and flips, or what are you doing there?
Yeah. So right now, so probably for like the last little over a year now, I've been investing in Cleveland, Ohio. So basically, price points are dramatically different, right? So when you go to the Midwest, you're not going out there to, obviously there's appreciation, but history shows over time, it's not like Phoenix, Vegas, boom, where it shoots up, very slow, little to none, but you're there for the cash flow.
Mm-hmm.
Right. So I made the decision because the prices were so high out here in Phoenix, low cap rates. Made the decision to start looking in Cleveland. And as we were ramping up our marketing to contact the homeowners, COVID hit. So I was like, kind of like, yo, what are we going to do? So rather than stopping and giving up, we just rolled it out. Right. So I made the decision to wholesale first in Cleveland to get the market, to understand what, looking back, I did give up some good deals, but I got to meet. So when you're talking about out of state, once again, it goes back to your investor identity. What are you doing out there? Right. My goal is to be a landlord. I started off by wholesaling so I could purposely understand the neighborhoods, meet real estate agents, property managers, wholesalers, contractors, and so on. So the first probably less than a year, just under a year of COVID, I did 25 wholesale deals and built my team in Cleveland, Ohio. Now you don't have to wholesale to build a team at all, right? But that's going to be your number one thing. If you're looking to go out of your market, it's all team.
Got it. Okay. So what does that team look like? So wholesaling, your wholesale team, would that include someone on the ground to go and look at properties, or a realtor, or what do you mean by that?
And it takes a lot of searching and picking up the phone and calling. So yes, I do have boots on the ground out there, and you can get it from, me sometimes, man. Like what's that quote about luck? Like luck's not real, but like constant action, and it kind of like you create your own luck kind of thing.
Right. The harder you work, the more lucky you get.
Yeah. Like, man, longer as I, get older in the business, like it's couldn't be so true, man. Like, so check this out. I used to host a cash flow game here, Cash Flow 101, the board game.
Yeah.
So I hosted that here in Phoenix. There was a gentleman that used to come to my game every week. I used to every Saturday. And so anyways, COVID hit and I stopped. So now here we are, months later after that. And I see him post on Facebook, social media, you got to be on there. He's living in Cleveland. I'm like, oh, what's he doing? So I was like, hey, what's up, man? How you doing? What are you doing in Cleveland? He's like, hey, man, I just moved here. My girlfriend's out here kind of thing. And I was like, okay. Said, I need boots on the ground. So he started taking pictures of properties for me. But, before that, though, I was leveraging wholesalers. So there's a specific wholesaler out there that I met. Basically, I was joint venturing with him. I would find a deal, he would find a buyer. So he would actually go out to properties as well. So ultimately, I had those two guys helping me out, right? So you want a property manager, number one. And then you're gonna, obviously, it also goes back to identity. Are you looking for a turnkey where you're just buying them already fixed up? Do you just need a property manager, right? That's your agent. They can go see the property. Then you get an inspection. As long as the property is good and you understand the area, that's all you really need to worry about. But if you want distressed deals, agent, property manager, and a contractor. Your property manager and contractor are going to be key.
Got it. Right. Because you're going to have to be able to do your deals that way. So let's say you want to do buy and hold rentals.
Okay.
And you want to do it in an out-of-state market. The best way to do that, like full picture, would be finding the deals, finding someone to look at the deals, and then manage them, right? That's kind of the pieces you would need.
Well, yeah. So the piece, so if you're going to go out there and say you wanted something that needed a little bit of work and you wanted to put in the efforts. So yeah, you can get deals from wholesalers and agents and do your own market. Like you don't have, like I have a good buddy of mine. He has 125 rentals out there and he buys from wholesalers and agents and that's it. He doesn't do his own marketing. So I know I'm leaning on that a lot in this conversation because I do it. But so, you just got to have deals to analyze and write offers on. And then, yes, your property manager is going to be key on helping you understand the neighborhoods and what the rents are. But you should still be doing your own due diligence. There's like rentometer.com, PropStream, Zillow. Like if you just average them all out, you start to see a trend. They're all pretty close. Then you verify that with your agent. So that's for sure. And then, yes, you're going to need, you probably want to get a home inspector, right? And a contractor, right? So at first, till you get used to the area, kind of you get a good relationship with the contractor, I would recommend getting a home inspection. You can find them on Google, Yelp kind of thing, right? It's $500. They go out and they tear the house up in a good way with a fine tooth comb and say, tiles peeling here, the carpet's ripped right here, to the furnace is dangerous, right? Like they'll tell you everything. So you as an owner know everything with this house. That doesn't mean you have to fix everything. Right now it goes back into your identity. Do you want to gut this thing and renovate it? Or do you just want to make it safe, clean, and affordable and just kind of, so you just start determining what you want done. Then you have to have a contractor come in. I would recommend getting 2 or 3 contractors, send them out there, have them give you bids, right? Then you're going to see different prices, different scenarios, and then whoever you feel comfortable with price wise and quality, whoever you think is going to be the right person for the job, you have to pick that person, right? So that's the key. And then once the contractor is done, the property manager comes back and rents it out and then maintains it.
Yeah, that's awesome. I mean, really, when you look at the concepts of real estate, there's not too many pieces, right? It's just a matter of putting them together in the right way and analyzing them in an accurate manner. I mean, I think people, when they hear about like analyzing a deal or real estate, it's almost intimidating. There's a lot of jargon and things like that. But the more I've been studying on my own, it doesn't really seem like there's too many moving pieces. Has that been the experience with you? Like as you've become more to where you are now, it's just kind of like clockwork. It doesn't really take a lot of, stress over, how things work or anything like that.
Yeah, obviously, just like anything, the more you do it, the easier it gets, right? That's the hurdle new people have to get over because you can get you. I still say this to my team and everything. Like sometimes I'm the one in the way. You know what I mean? So like you can get in your own head and overanalyze it, and be scared to pull the trigger and say, "What about this? What about this?" So that's where your team comes in, right? And I would say analyze 50, 100 properties before, even if they're not your deals, just analyze them, right? So yeah, it does get easier, but the process of buying a house has never changed, right? You find it, right? You write a contract, you inspect it, right? You get the money in place, it closes at the title company, you own it, you remodel it, fix it, and you maintain it, and then you sell it or whatever it may be. That's never changed, right? There's a lot of little variables and how things are structured in the middle of all that, but it's the same thing. If you want, since we're talking about landlording, right? What's the basics? All right, gross rents. I mean, the income that I could bring in on this property is $1,000 minus expenses. So there's so many calculators out there right now, like it puts it all there for you. But I like to push it. You just got to be able to pencil. I like penciling it out. And I always recommend that. I know you just punch things in the calculator and it shoots it out, but I like just understanding every single thing first. So what are all your expenses after that $1,000 comes in? It could be property management, right? It could be landscaping, gutters, shovel it, snow, like depends where you're at. It could be routine maintenance. It could be taxes, insurance, right? There's something we call it CapEx, right? So if you don't, capital expenditure. So if you don't renovate the property, maybe some wear and tear, you might want to start saving every month towards maintenance in the future. Vacancies, right? If I don't know what market you would be in, but sometimes you might be able to rent it out in 2 days. Some might take 2 months. I don't, it depends where you're at. So you got to have all that first as your expenses. Then whatever's left over is your net operating income.
Mm.
Now, that's what you're looking for. Now, the next step though, if you have a bank loan, is now minus your mortgage payment. And then that's your true cash flow. So are
Right.
you happy with that number?
Mm-hmm.
You could just do that, right, on every deal as much as possible. Yeah, it starts to become easy,
Yeah. One of the parts that I've personally had to do the most, like investigating, or that seems the most complicated to me, is the contract side of things. And that's,
Mhm.
I mean, that probably sounds like, oh, contracts, that sounds like a lawyer has to do it, especially with a creative finance deal. Have you found that if you can write it on paper, it's just that easy and you can make a deal happen, or do you have attorneys look over everything with contracts, or how do you manage that?
Got it. So depending, yes, I have over through the years, through friends and so on, you collect documents and right. Also, I just did this here, people share things, so over the years I've compiled, like for subject to, there's like disclosures that we have for the homeowners sign. So have I went to me personally gone to a lawyer and said, review all my documents and tell me this and that? No, it's kind of been more of a learning lesson for me. Like every deal is different. Still to this day, I still learn on these
Mm-hmm.
deals. So I'm always adding into it and everything. So I will say I am, if on this next deal I was just telling you about with the sub two, I am hiring a lawyer to oversee that one, for the fact, which I think I already know, but just to be safe, because I'm giving a right to sell this house to somebody. I'm selling the
Mm-hmm.
right with taking money from them or down payment. But what I know, it's never been done, or whatever people say about due on sale clauses. But what if they do take the house back, right? And I got to sell it to this guy because I did a rent to own agreement with him, not just a normal renter, right? Like, so I'm in a new contract. Even if it was a renter, I'm of it. I can't, I'm breaching it. So I am hiring a lawyer. If I find that buyer, the proper buyer, I'm gonna hire a lawyer just to oversee everything first.
Mm-hmm.
But I always recommend, I'm not a lawyer, so have a lawyer check all your contracts if that's what you feel like you need to do. So no, so basically, I have templates and I just been using them and I add things as I go.
Yeah, for sure. Um,
They're
let's
not hard to
see.
find. So if you're like, oh, I don't have the contract, they're out there, man. You can get them everywhere.
Yeah, for sure. Um, as far as finding a deal, how much of like today, where you're at now, where you probably have the means to be able to fund your own deals, how much of your own money are you spending, or are you using private lenders and things like that to do your deals?
Private lenders. So that's one thing that's the next most important tool, right? So I would say it's depending on your strategy, marketing and finding the deals and having the money is key. So I learned how to raise money from private lenders. Now, when we say private lenders, I know a lot of, like, there's traditional banking, like Wells Fargo, Bank of America. Then there's hard money loans, right, which is aggressive short-term loans, which I don't recommend for long-term. They get you in the deal, then allow you to restructure to get out, right? So then there's what we call private money, and I know some smaller banks might position it as private money and say it's private money, but what I'm talking about is friends, family, or relationship you built, that people that work have money in an IRA or cash just sitting there, and they want to work it outside of the stock market, and they know they want to be in real estate. So private relationships that we build. So yes, there's a marketing strategy in general just to build that,
Mm-hmm.
right?
Yeah.
To get people to lend you money. So when now as you build a list of people that want to work with you, now I'm like the operator, right? So an owner, the way I like to raise money is they're the bank, right? They got a lien position on the house. They give me $100,000, and it's not like, what's great about private money is why I say that's where you should start. It's not traditional. right? So I get 100% of acquisition and 100% of renovations covered. I don't have to they don't check my credit. They don't check my job, whatever, anything, ask me for anything. They just know, they trust me. They know I know what I'm doing to execute on the deal. So boom, I cut a deal with them, 100 grand. I'll give you 9%, 10%, 5%, whatever it is, monthly interest only payments. And then I cut a year, 2, 3 year deal. And then I go in, take the money, buy the house, fix it up, rent it out, then maybe refinance out, give them their money back. Or if they want to be a long-term partner, it's just, you do it long-term.
Yeah, that's awesome. How would you structure it if you're using private money to, for example, say you found a pre-foreclosure and you wanted to use private money to get the arrears or pay for all their late payments up? Would you just give them a percentage of the rent till they were paid back, or would you refinance out? How would you get them their money back?
That's part of analyzing, right? And all the different components. First, you got to say, yeah, is there enough there for them, right? That's part of it, right? So when I said that, when you go gross expenses, NOI minus mortgage, so you got to be able to calculate the deal and make sure that 40,000, or I'm using my scenario, whatever I have to pay them on that money, there's a couple things. One, do I cash flow enough, right? At the end of the day, is it safe? Is this a safe investment? Two, now, since for that scenario, it's going to be hit or miss because they have to be comfortable being second position. Does that make sense? Because the Bank of America or whatever it is in first position. So now,
yeah,
when it comes to protection for them, they just need to understand something goes wrong here. Bank of America gets paid first, right? So that's what you'd have to do on those. So I don't know, what was the question?
I guess this is, yeah, how would you structure that with private money on a deal like that? So that makes sense.
Yeah, they would just, same thing. They would just, or you could say, hey, put up the money and you could be 50-50 partner with me. You get an LLC created and they own and operated, they own half, you own half. And then boom, you guys are both on title. They bring up the 40-50 grand. Now you guys are business partners now. Now you're just splitting whatever's left. So you don't have to worry about an interest payment every month that you committed to. So now there is no mortgage or payment on top of, well, since we're talking subject to, it might get confusing, the bank's mortgage, then their mortgage, right? Like, so that's gone now. So that helps you cash flow. And then that's what's great about real estate. You can even negotiate that partnership. It doesn't need to be 50-50, right? What's their goal? Their goal, maybe they want cash flow. So my property, in Arizona, we get appreciation. So just to show you an example, I could say, hey, you know what? I know you're looking just to work the cash in your bank and you want streams of income. I'll let you get all the cash flow every month, right? So nothing's coming out of my pocket, right? For this example, or you can get 80%, I get 20% of the net cash flow. But when we sell, let's say we come back together in 5 years, we make an agreement right now that if the market's where we need it to be at in 5 years, we sell, and then maybe I get 60% of that sale and you get 40%, or that's what's great about real estate. You could just be creative like that.
Yeah, that's awesome. I've never thought about doing a partnership in that way.
Yep. That I would have an attorney, right? Like I always say, when you're doing the joint venture operating agreement, you want to hash it all out up front and get it in an operating agreement. So everything's there. Hey, someone passes away, someone doesn't want to be in the business anymore. Well, this is what the operating. So that's where I would definitely hire an attorney and get the operating agreement. And I always have the lender pay for all those fees as part of the deal.
Yeah. It seems like in real estate, it's just the opportunities are endless. There's so many ways to make money, and there's so many ways to kind of find your niche or get started with no money and all these different things. And I mean, it may not be, correct to be like, put a number on that amount of opportunity, but from your experience, knowing what you know now and having that knowledge and experience, if you were to look at someone and tell them how much money they could make if they just went all in on real estate, what do you think is a realistic first year for someone?
I mean, man, that's real. I mean, that's a big question. So it's like, what's the strategy, right? Am I a flipper? I mean, that's really,
it's impossible probably. Yeah.
hey man, there's a lot of variables there, right? Where's your time focus? Are you just wholesaling? Are you by yourself? Do you have a team? Right? Are you fixing flipping? Are you doing all the work yourself? Like, what are you capable of taking on?
Right.
Okay, so this isn't going to answer the question. Like, yeah, I see some of these younger guys on the internet like, yo, I'm making 6 figures a month virtual wholesaling. I'm like, but my whole day, like, I'm not, I don't do that all day though, because I have rental properties, you know what I'm saying? I have different, things that I'm doing. My strategy is just different.
Mm-hmm.
So as a landlord, I'm not going to make 100K a month unless I, so what are you looking to do, man? What are you trying to do? What are you capable of doing? What's your goal? I say it's possible, right?
Yeah, I
Whatever,
like that.
um, and I don't want to limit anybody either, because I might say you can make whatever 100 grand this year, 200 grand, you can make more. Yeah, that's a tough one for me to answer, man. It depends on how you structure it and go about it.
Yeah, no, I agree. That's a good answer. And kind of what I was getting at to leading to the next question is what stops people from going out and chasing those opportunities or building a business for themselves or becoming successful. It says on your Instagram, you help parents create cash flow through real estate so they can provide for their families. Like that, who doesn't want that, right? What if someone sees it and they think that's what they want for their life? What prevents people and that you've seen from chasing their dreams and all that stuff?
It's the unknown, right? It's like it's fair, right? They don't know what they don't know. Kind of like we were talking in the beginning, like the investor was able to see, like it's a scam. Like what's obviously if you want to go down, it goes back into like how they're raised and like what are their beliefs and values in life. Or you got to break that mold. Like that's where I came from, man. Just 9 to 5 middle of the road place where I thought I was gonna be like a carpenter or something. So it's like I had to break that way of thinking. So I think it's yourself. I'm sure you get that answer a lot. So it's themselves telling themselves why they can't or what they don't have, or oh, I still need to do more of this. I need to have all my ducks in a row kind of thing. Like I didn't do all that. I just blindly went. There's there's disadvantages of that because you can make mistakes, but I got that fear out of the way, right? And like when you do something, you're like, oh, that was easy. What was I even like complaining about? You know what I'm saying? That's what happens. So I think it's you get in your own way.
Mm-hmm. Yeah, and that makes complete sense to me because I mean that's like everything. It's scary at first, and then you get some experience, and then now you're where you are, where you're teaching people like me how to do real estate stuff, and it's just like part of your day. You don't even think about not failing because you've been doing it so much, probably.
Yeah, man. Hey, man. I still get scared on things to this day. Like, so it's just something that's always going to be there. But you just got to be confident in yourself that you know what you're doing. You got the right people around you. And I was talking to my partner about this. Everything always works out, man. Like I don't even know. And it might be hard to swallow, but it always, even if it's not like the greatest turnout, or maybe you lose a little bit on something or get roughed up, but like always works out, man. Still here 12 years. I've been through like many like lawsuits. I've been lied to, stabbed, like not stabbed, but you get what I'm saying.
Yeah.
Like I've been through a lot, man, and still here, man, still going.
Yeah. I mean, obviously you're doing well just from even this conversation that I've had. I can tell that your intentions are good and you're giving back a lot of information and value and, breaking down exactly how to do things. So I think you're a good example and I'm looking forward to following you and hopefully keeping in touch with you.
Yeah, man, for sure. Like people are there to help. I'll tell you, that's like, you get that, hey, that investor's busy. I don't want to ask them. I don't want to bother them. Right. Once again, it's yourself, right? Like, so like I like to help. At the end of the day, I don't mind because I got helped, just like my story. Like I was helped. So, and our business is all about relationships. So if you came up to me, you're like, hey, can I answer a couple questions or how should I do this? Of course. Am I going to go could go to a point where you're like a time vampire and you're blowing up my phone and you're not applying what I tell you, right? Like that's a different story. But here's how investors also look at it, right? If you come up to me and it's like, hey, I want, I'll bring you some leads or show me a couple of things, I'll go out there and do it. I don't mind. I mean, we're gonna do a deal flow for me, right? So if I have, 5-10 new people out there just doing some basic marketing and I'm willing to walk them through the deal, I might get first shot at buying it. Right. So investors know that, so it depends how you want to trade your value. Like bringing a deal to the table is value. So that's one way. I would say coach mentoring, man. I've always had a coach or mentor.
Yeah.
So I wouldn't shy away from that because you'll beat the learning curve.
For sure. Yeah. And then the more I've been learning about real estate, that's kind of been part of my angle with the podcast, is be able to network and meet people like you and maybe do a deal with someone I'm interviewing one day, just to kind of, bring it all together with the information I've been learning.
Yeah, man. Like right now, if you found something in Sedona, call me up.
All right. Sounds good.
So yeah, man. No, I appreciate it. Thanks for reaching out, man.
Yeah. Thanks for coming on the show. It's been great. And I think that people are really going to enjoy this. And if they're interested in real estate, for sure, there's a lot of tactical information in there. A couple of questions, just spitfire a little bit. The last two I always like to ask is, what's a book you recommend? And then your definition of wealth. And I know the last one, you don't have to, you can kind of give a short answer if you want.
A book I would like to recommend. I'll recommend this one because, where is it called? There's a lot of books, man, but like this has a real estate. I don't know if it's gonna be backwards. Winning Through Intimidation.
Yeah.
That was pretty good, man. It's not the average book you see everyone recommending, right? So check this one out. The author is Robert Ringer. He's a real estate broker background, and so he goes through some of his scenarios in the real estate world. So yeah, check it out, man. That's a book I would recommend. And wealth is I look at it like, first, obviously, everyone thinks money, of course, right? So but having the being financially free where I could do what I want, when I want, with who I want, wherever I want, kind of thing, I think and having all my finances in place to leave for my family. Like if I wasn't here tomorrow, can my family, survive? Can my, or when my son grows up, he's going to have all the rentals. So like, that's just wealth to me, man. Just being prepared to live my life the way I want to and let it go down to my family. So
that's awesome.
If I could do that, that's wealth. Wealth is also wealth of happiness, right? Just that kind of stuff, man. That's even health, the big picture, man. That's what it is for me.
Hey, that's great. Where can people find you on Instagram, social media? Anything you want to plug?
Just my website is Michale Delprete. So maybe I'm sure you put it in the show notes, michaledelprete.com. I have a free wholesaling book. If you just want to understand what it's about, you could download that, learn a little bit more about me. And I'm on all the platforms, but mainly you find me on Instagram. It's just at Michale Delprete as well. So give me a follow. Let's connect.
All righty. Michale Delprete, everybody. Get wealthy.
Thank you.